What's up guys, welcome back to the channel, welcome back to bitcoineasy.io, and welcome back to another Bitcoin analysis. Earlier today, if you haven't checked it out already, I posted a video over on X explaining you guys exactly how you can set a reminder for the event tonight. Of course, we're talking about the FOMC event, the announcement that's coming about the interest rates in the US. And that will have a huge impact on the market if we get outside of the range that's predicted and priced into the market. So since January, interest rates have been steady between 4.5 and 4.25%. So anything between there is priced in. And if we get a slight cut or a slight hike of the rates, then we can expect some serious action in the charts. And now we got to see exactly where the confirmation levels lay for Bitcoin. And then, of course, that's decisive for the entire crypto market and markets in general. Right now, we're getting a huge test from Bitcoin coming to a key area here, trying to break the previous highs on the smaller time frames to print another higher high across the board. But we got to see exactly where the confirmation levels are. And I already did tell you guys over on X today, I posted this morning. So another reminder here for you guys to follow me over there as well. Let me just show you here, Petas Crypto and Bitcoin Easy.io over there as well. And that's where you get the fastest updates all around the clock. And here this morning I also broke down how exactly you can add events to your calendar on your device to get notified whenever they take place, such as the FOMC meeting, the results that are coming out tonight. You can add that to your calendar directly in the crypto loop. Check out the video, it's right at the top of my X profile right now. And there you get the exact walkthrough on how that works and some other stuff, how to utilize the crypto loop to analyze and get your news every day without all the noise, right? And then here you can see as well, I updated the charts already and told you where the key levels lay on the 4-hourly chart. Something that I posted March 16th that is still very relevant. Nothing really has changed since then. And therefore these levels were still exactly the same. And yeah, guys, all around the clock, I update you here. So make sure to follow me there. Now let's go straight into the charts. We're starting out on the hourly chart and there we can see it already. Here, Bitcoin approaching a key area. First thing that we want to look at here is the current trend. We can see that we at the local range here, we've been forming lower highs and Bitcoin is getting right into that area where it's testing the previous high of that range, which of course on a closing basis is right at 84,500. Of course, in such dramatic times where there's so much action and so much uncertainty in the charts, you don't want to go off a hourly close. You want to see at least in combination a close on the 4-hourly chart, because there's huge potential for traps here since the market is awaiting a huge trigger point with the announcement tonight. And therefore, I'd be really, really careful up here at the resistance as well, even if we get an hourly breakout, to take that into consideration as a clear breakout for the trend across the board, right? And especially if you look at the larger time frames now that we will see in the 4-hourly, 6-hourly daily chart and so on, there's extremely strong resistance in the same area that we find the resistance here on the hourly chart. So just to go off an hourly close here above that resistance is a bit naive and a bit aggressive for my trading style. So I wouldn't recommend it. But as always, guys, I gotta let you know, I always have it in the disclaimer down in the videos. This is also not financial advice. This is simply here for educational purpose and also for some entertainment, hopefully. So keep that in mind, guys. Here, that's the key level to break now to get a confirmation for a breakout here on the hourly chart at least. Then we would want a follow-up on the 4-hourly chart as well to confirm the breakout. And that level lays right at, once again, 84,500 here. Now to the downside, the key support levels we will look at on the 4-hourly chart and 6-hourly chart in a second. But keep that in mind. We're in a very, very key resistance area right now here. You can see here we have alignment of the 78.6 from this current swing here, from the high to the low. There we're just sitting just above, but we're sitting right at resistance here. So yeah, guys, let's look at the 4-hourly chart now to get a bit of a clearer view of the whole thing. And there we have it. That's also what I posted this morning. First of all, what we see here is this trend, right? We have this symmetrical triangle that we just saw on the hourly chart as well. And there we see that we've been printing higher lows and higher highs here after coming down, of course, out of a downtrend where we've been doing the opposite. So the goal here is to confirm this here as a higher low. In order to do that, we also, of course, need to break the previous higher high. And that sits right here on a closing basis at 84,800. And the overall higher wick base is right at 85,300. So that's still the level that we want to take out here on a 4-hourly closing basis and overall at 85,300 to then continue upwards to the 86 to 86.5K range, which we can see up here, which also lines up perfectly with the gap that still needs to be filled on the CME chart. Here we can see that gap on the CME chart. You can see here right between 86,385. That's where we closed on the Friday and then opened on the Monday at 82,700. So there you can see we've been trading within the range, but we have not managed to fully fill the gap yet. So there's still room to the upside there as well, and it aligns perfectly with our targets on the charts that we just saw, and therefore really clear spot to also take profits in case we get there now before the announcement comes. Then of course this becomes really strong resistance, as it's unlikely that we trade any higher than that before we get any clarity from the rate announcement. Now back here in the 4-hourly chart, the key levels that we need to look out for, of course, you can see this orange line that we're just sitting above here now. Of course, a crucial level that has served as support here last weekend, where we started consolidating above the previous highs, which looked extremely bullish, but we then broke down from there, tested that area a few times again. But what we really want to do is turn that back into support and then break those key levels that I just spoke about to get us towards the 86K range, right? And then to the downside here, you see this is the orange box that I mentioned a few days ago, 2-3 days ago. I told you guys this is the line in the sand here, the levels between the 61.8 and the 78.6 on the Fibonacci retracement from this swing here, from that previous low to the current high here. Then we wanted to stay above the 78.6, the line in the sand, which also of course lines up perfectly here with the trend line. And that we did. We came down first to the 61.8 here, bounced there, touched the previous highs again, came back down, and now came on to the 78.6 and the trend line, found a bounce there and continued in the trend. But overall, to continue this uptrend here that we've been forming, then we want to break the previous high once again here, guys. To the downside here now, to continue in this trend and to print another higher low here in this current symmetrical triangle, then we need to hold in this area here. You see right between 82,500 and 82 flat basically here, and that also comes in alignment here with the 61.8 from where we bounced previously here and challenged the highs again, and then also from the 38.2 of the retracement from the current downswing here, from this previous high to that current low, lines up perfectly here as well, also once again with the support of the upsloping trend, and then here another support level from the previous low here on a closing basis. So really strong support in that area, and that is where we want to find a bounce in case we get down here again. Of course, if we get bad news tonight, then the likelihood is that all of this breaks down, as well as the 80K level, and that we go down to at least test the previous low. And then you know my bias, guys. If we go down to these levels, then the likelihood is that we go even lower than that to the 74 to 72K area, which is our most logical support before we bounce long term again and take out the current all-time highs. We will see that in a second on the larger charts, but just to make sure here, everything is covered. The confirmation levels to the upside, to the downside. Really keep that in mind now with such a massive event coming up on the smaller time frames as well. It's really important that you keep your eyes on that. 6-hourly chart, very similar, guys. Here we can see the same structure here, basically printing higher lows and higher highs here overall, but currently now of course consolidating from our previous high here, and we still have the same mission here. You see the orange box marks the previous highs on a closing basis. That's exactly where we want to get above, right at 84,500 on a 6-hourly closing basis. That would then also set us here right above the downsloping resistance line from the symmetrical triangle, right? And if we get above there, then it becomes very clear here where our target lays as well. 86K range coming from previously strong resistance and support levels, as well as the CME gap that we saw earlier. So here, very important to keep an eye on as well at the support level, where we see the alignment from the downtrend retracement here, the same swing that we just looked at on the 4-hourly chart, and the same also as we looked at on the 4-hourly chart with the uptrend here retracement from this last swing. There we have, of course, the alignment from the 38.2 and the 50 in alignment with the upsloping trend line, and the support from the previous range low here. You can see giving us extremely strong support. A break below here then once again would send us down here to this orange box, which represents the previous range lows here from this area. If we fall down here, of course, then the key area comes into play that we will see now on the larger time frames, as well as the target area if we break the 86K range. Here we have it, very clear on the daily chart. We see this massive falling wedge here that has started forming on the support side since we put in our first all-time high here in this range of 108K, and then came back down here and started printing lower lows already before we put in our current all-time high of 109K, and then continued here as the same thing with the highs, where we started printing lower highs then and formed this downtrend here. So here we can see also that the previous support that was given by the 200-day SMA here in this range has now turned into our key resistance level in alignment with the closing lows of the previous range. And you can see that's the exact rejection point here for over a week or so. We got rejected here since March 10th, every day basically. And this is then of course the key level that we want to get back above to give us here a nice target then afterwards in the 90 to 92k range, coming of course from the resistance of the downtrend, but also from this key support area from where we bounced to our 108k top and 109k top. Right here, 90k or 89k to about 92k. That then of course becomes a key resistance that becomes a very, very strong target for long positions if we manage to reclaim here this previous support. To the downside, of course, we see if we break this yellow line down here right at 78,500, if we close below that, then the likelihood is here that we break the current lows overall and then come down here back to the support of the falling wedge. And that lines up perfectly then as well with our key support area that I mentioned a million times here on the channel, right at 74 to 72k. You guys know my bias. The likelihood is still that we go down there first before we go for a long-term rally here. That of course depends a lot on the news today as well. But overall, I think before we go long-term up and full bull mode, we go back down here to this range, pick up demand there, and then get a massive bounce from there, hopefully. If we stay down there, then it becomes really, really ugly on the larger time frames, such as the 3-day chart and the weekly chart, which we will look at in a second. So keep this in mind here. 84k to the upside is the key level we want to break, and 78,500 to the downside is the key level we want to hold from a bullish perspective. Now here on the 3-day chart, we can see it looks very similar. This candle is closing today as well. So really, really key, if we get a 3-day close above here, the key resistance level of 84k, then of course, strong indication that we go down here to test those levels from the previous range support and the resistance from the falling wedge right in the 90 to 92k range here. Very, very similar to what we saw on the daily chart, and of course in perfect alignment today since these candles are closing together. The support here is currently coming from the 3-day 100 SMA in alignment with the support of the falling wedge, of course. And then the same thing here. If we start closing below here, then we are approaching, of course, the support of the falling wedge. And the key area here aligns with it, the 74 to 72k range, where we then want to find a bounce and close back above the moving average. That is key since this has been such a strong bull market support. And we see that we shot wicks down there, even had a brief close below there, but immediately rallied back above. So that's the worst case scenario that we want to see here as well. Something very similar actually to the previous range here, where we revisit the previous range high, bounced from it, and then got back above the moving average and rallied out of that range. But here we can see that it's the same thing. When it just wick below the moving average, visit the previous range highs, bounce from there and close back above the moving average. And that becomes even more important over on the weekly chart. Of course, no weekly close tonight, but we have a key moving average here that we need to look at, as well as some key Fibonacci levels. There you can see the 50-week SMA that, of course, historically, every time we came down, guys, I've said it, it feels like I say this 3-4 times per day, but it's, I've been saying it actually since 2022 when I first started posting videos here, and I told you guys about it, where every time we put in a new all-time high and ended up coming down to the 50-week SMA, and we didn't shoot just a wick below it, we ended up closing below it, that was confirmation that we're going into a bear market. So here the same thing, no problem if we shoot a wick below here, into that key area there where we see a lot of other stuff as well, which I will get to in a second. We want to get a wick down here, bounce from it, close back above the 50-week SMA, and then is that, of course, very strong confirmation that this is our key support area here from where we're continuing upwards long-term to challenge the previous all-time highs. So yeah, guys, there we see as well here, not only that moving average above us, the one that we want to close above, but also key Fibonacci levels. You can see here the white, the larger retracement coming from the bear market lows to the current all-time high, and there we have the key level of 38.2, lining up perfectly with the top of this previous resistance area that now would turn into extremely strong support area, as well as the 61.8 of the Fibonacci retracement coming from the previous range lows to the current all-time high as well. So a lot of stuff lining up there. So that means that different traders using different systems see the same things here in the charts, and therefore a really logical area here to place long orders once we get down to that area, since it obviously is such a strong support level. Right, guys, that's it for me for today as far as YouTube goes. I'll of course be active over on X later, letting you guys know exactly what is going on in the charts the closer we get to the event and right at the event. Make sure to follow me over there. That's how you get the fastest updates all around the clock. I gotta head out now. I got a bunch of errands to do to get done before it gets tight in the charts. And yeah, guys, I'll keep my eyes on everything. I'll make sure to update you. And guys, as always, happy trading and see you soon.